Hey there, tech enthusiasts. Welcome to the Friday edition of the Tech Stocks Daily Podcast. Buckle up because we've got a thrilling lineup of stories to get your gears turning. First, we'll dive into Oracle's recent market buzz, where bullish traders are staking some serious green, stirring up impressive earnings forecasts. Then get ready to be blown away by DocuSign's stock soaring on outstanding Q3 results. But wait, there's more. Microsoft is caught in a captivating tug of war between optimistic bulls and doubting bears. Which side will prevail? Lastly, we'll uncover why Block Inc. is at the forefront with bullish investors placing big bets. Whether you're an investor or just love tech drama, today's episode is packed full of insights you can't miss. All right, folks, strap in because today we're diving deep into the world of Oracle. The tech giant is making waves across the board, catching the keen eyes of investors both big and small. Let's break down the buzz and explore why Oracle is the apple of everyone's eye today. First up, options activity. Lately, Oracle's options market has been buzzing with activity. When the big money traders start making moves, people notice. And boy, did they make moves. We're talking about traders bullish enough to put the weight of $2,677,792 into calls versus $154,873 into puts. What does that mean? Simply put, there's a whole lot of optimism, or at least heavy betting, that something big is brewing at Oracle. With experts eyeing a price window from 150 to 230, the looming anticipation is as palpable as coffee on a Monday morning. Flash forward to analyst ratings, and you've got a mixed bag of excitement. We have Jefferies and Guggenheim holding tightly to buy ratings, forecasting price targets of up to $220. Meanwhile, RBC Capital is playing the less enthusiastic cousin at the family barbecue, bringing it down a gear with a sector perform rating, looking at $165 as their target. What we're witnessing is a classic game of who's got the crystal ball, with analysts tossing around numbers like it's freestyle karaoke night. But hey, what's a good stock story without some pressing financials, am I right? With Oracle setting up to release its second quarter fiscal year 2025 results soon, expectations are hotter than a jalapeno in the Texas sun. Projected earnings are pegged at $1.48 a share, with revenue forecasts riding high at $14.12 billion, a nice jump from last year's figures. Yes, you heard me right. Oracle is predicted to be rolling in dough with a big side of excitement for its investors. Let's talk dividends, the sugary bonus on top of all these news brownies. With an annual dividend yield of 0.86%, Oracle is also trying to seal the deal with its shareholders in the cash flow department. Analysts are putting on their finance mitts, calculating what it could mean to pocket some steady, chilled-out income. Want to earn $500 a month through Oracle? Well, you're dreaming in the realm of owning 3,750 shares. For the paperwork phobic, that's nearly 700,000 in ownership. For the more lighthearted $100 a month folks, it's a steadier $139,680 investment. Cool parties await in both accounts. Oracle's ongoing developments paint a picture of growth, or at least something juicy looming on the horizon. So to everyone with an eye on the prize, keep watching this space. Oracle is strumming the chords, and the crescendo may get here quicker than the next email getting pushed to your inbox. And that, dear tech fans, is why Oracle's presence is unavoidable in today's news carousel. Will their earnings hit the mark? Can those grapevine whispers materialize into hard stock realities? Let's wait and see with fingers crossed and browsers refreshed. All right, folks, today we're diving into what's been quite a whirlwind for DocuSign, the e-signature and agreement cloud company that's been the talk of the town on Wall Street. Let's break down why everyone's buzzing about this tech titan. Firstly, DocuSign stock took off like a rocket, soaring around 28% today after the company released its third quarter earnings and served up some delightful surprises for investors. They reported revenues of $754.8 million, which is an 8% increase compared to the previous quarter. Not only did they exceed analyst expectations, they also delivered adjusted earnings per share of 90 cents, cruising past the projected 87 cents. What really got investors' pulses racing, however, was DocuSign's optimistic guidance for the upcoming quarter. The company predicted a revenue range of $758 million to $762 million for the fourth quarter, which again overshot the analyst consensus of $755.95 million. Furthermore, the billing forecast, a hot metric that investors love to keep an eye on, was bumped up to between $870 million and $880 million for Q4, representing a significant upward shift from the $752.3 million recorded in Q3. You might be wondering, why all the hoo-ha about billings? Well, billings account for all contract sales made during the period, and these figures often offer a sneak peek into future revenue streams. It's the metric that new CEO Alan Thygesen is riding on to pump up future growth. Notably, about a third of these billings came from frisky early renewals, indicating a stabilization in the demand environment. Now, let's sprinkle in some high-stakes drama. Large investors have been spotted making bullish bets on DocuSign options, suggesting there's more belief that the good times might roll on for a bit. Our pals over at Benzinga's options desk noticed 41 unusual trades with a majority indicating a bullish sentiment. Options priced between $55 and $120 have been placed, pointing to their predictions of DocuSign's potential price trajectory over the next few months. As thrilling as this all sounds, not everyone is partying just yet. Analysts remain partly cautious. While there's optimism around DocuSign's new growth levers, like their Intelligent Agreement Management initiative, there's an agreed need for more evidence that these innovations will carry long-term growth and stabilize earnings. Mighty impressive margins in this quarter bring hope, yet the pathway to sustained double-digit growth remains somewhat aspirational. In short, DocuSign has stepped onto the stage with a promising financial performance and a reassuring future outlook. That said, its overall valuation and growth rate need to keep convincing investors that DocuSign is a comeback kid worth betting on. DocuSign is balancing on a tightrope between recognition of its boosted performance and the undeniable need for continuous proof of its transformation and innovation strategies. And so, the story unfolds. Hold on to your mice, folks, because Microsoft is making waves in the tech world, and believe me, it's a splash worth talking about. Whether you're a tech investor or just a fan of the company, today's spotlight shines brightly on good old Microsoft, ticker symbol MSFT. First stop on this thrill ride, Microsoft's options activity. It seems big money investors have been feeling a bit bullish, with some equally eyeing the bearish side. What does this mean? Well, today we saw 15 uncommon options trades pop up on Benzinga's radar, sending signals that someone or some group with deep pockets anticipates something noteworthy brewing at Microsoft HQ. We've got a major split here. 60% are betting on Microsoft's stock price climbing, while 40% seem to believe it may face a dip. We're talking about trades from $395 all the way up to a hefty $465. It's like watching a lively game of strategic twister. Get ready, because these bullish and bearish plays are all part of the bigger options puzzle that paints a vivid picture of what's to come for Microsoft stock. Digging deeper, Microsoft isn't just about numbers, it's a transformative tale. Celebrated for its monumental stride since going public in 1986, Microsoft transformed from a company pivotal in home gallum in the PC market to a mammoth cloud titan, all while scripting a roadmap for technological evolution. What about its classic suites, you ask? Tools like Windows and Office remain deeply anchored in personal computing. But here's the kicker. It has more strings in its tech bow. Think LinkedIn for professional networking, Xbox and gaming, Bing for searching, and Azure guarding the cloud kingdom. Yet Microsoft is so much more than its traditional markets. As home computers became a staple and video gaming markets reached saturation, Microsoft realized the world was changing, and so did it. Tech innovations and hammer-forged strategies, such as subscription models, threw open the gates for predictable revenue, while casting fantastical fiscal sorcery known as profit margin expansion. Microsoft has embraced a give some, gain plenty stratagem with its Windows strategy, offering free upgrades purely to sew users into its greater digital tapestry. Finally, with evolving business models and mounting consumer demand, Microsoft's eyes are indeed set on literally reshaping profitability. The company's profit margins scaling multi-year peaks offer not just more ammunition, but exciting diversions to create shareholder gold through share buybacks and dividends. Just imagine the planet even more interlaced with its digital cheese. And you've got Microsoft's modern-day recipe for minting more millionaires lurking around the bend. One thing's sure, Microsoft's Odyssey isn't reaching for the rewind button. With AI transforming today's tech landscape and digital fiefdoms continuously expanding, MSFT promises to color the future in flourishing hues of innovation and profit, a powerhouse deserving much applause and attention. Hey tech enthusiasts, buckle up as we dive into today's buzzworthy scoop about Block Inc., the fintech sensation that's making waves and attracting serious investor attention. Today, Block Inc. found itself swimming in the limelight for a couple of juicy reasons. First up, the smart money crowd has their eyes glued to Block's options like a pigeon to a breadcrumb trail. Yep, those fat wallet investors, aka whales, are hoarding Block's call options, indicating a solidly bullish mood. In simpler terms, they're betting big that Block's stock is shooting for the stars, particularly between the $85 to $140 price zone over the next 3 months. That's some major green flag action. Zooming in on what 56% of these investors are seeing, it's all about bullish vibes, compared to the 32% who are not as enthusiastic. A good chunk of trades were calls, 34 of them versus a paltry 3 puts, raking in about $1,658,006 in calls compared to just $173,000 in puts. If you're the type who loves crunching numbers, the mean open interest for Block options trades today stood at a jaw-dropping 2,859.39, with a trade volume hitting 7,468 puts. Now on to why Block's catching media whistles. Over on Zacks.com, there's a feast for the eyes on how Block's recent strategies are being dissected. This company, known for its mobile payment prowess, not only topped the Zacks technology services industry by soaring 27.4% in the past month, but also outdid the good old Zacks S&P 500 Composite's rise of 5.2%. It's like watching David beat Goliath, but in stock market terms. Here's where the spicy details come into play. Block is expected to post earnings that are as refreshing as pineapple on a summer day. The projection for this quarter is a climb of plus 82.2% from last year's figures. Let's talk dollars. Block is eyeing an EPS of 82 cents, setting an optimistic pace towards a full-year earnings estimate of $3.49, a nifty 93.9% growth from last year. With all this good news, analysts are playing the grade school teacher role here, scoring Block as a historical marker for growth potential. Amidst changes in EPS estimates and sales predictions, the consensus stands firm. Block is still Zach's rank number 3 material. Before we wrap up our tech gossip session, what's your take on Block's market antics? Do you see the stock performing in line with its competitive pals, or does it have potential surprise tricks up its sleeve? Drop your comments below and let's stir the conversation pot. Remember folks, there's no such thing as a silly opinion. Chat away. Keep scaling those techies, as Block sure seems to be riding a promising wave. All right, tech investors and all-around stock enthusiast crew, let's take a closer look at Oracle and figure out whether to sell, buy, or hold this tech giant stock as of today's buzztastic news. Spoiler alert, it's a classic hold for me, and here's why. First, we've seen a significant uptick in options trading volume with a substantial tilt toward the bullish calls versus puts, nearly double. When big money players are making bullish bets, it usually indicates an expectation of upward movement. With analysts riding waves ranging from $165 to an optimistic $230, you've got a spread that involves both short-term tactics and long-term confidence. That's a big window, yawning wide open exactly like your best stretch on a lazy Sunday. On the heels of their upcoming Q2 financial results for fiscal year 2025, expectations are soaring sky high, like some protagonist trying to master a superhero landing. Oracle is predicted to serve up a handsome jump in earnings and revenue, meaning more dollars in their investment cookie jar. With positive vibes in their growth forecasts and a neat dividend yield sweetening the pot, there seems to be a steady, comforting rhythm to holding on to the stock and riding the wave of their potential earnings crest. That said, while riding the bullish hype train is entertaining, let's not all start writing Oracle love letters just yet. There's still a mixed bag of analyst ratings popping up, with our analytical party crushers like RBC Capital popping in for the cold sector perform forecast. With some caution cobbled into wild price predictions, a conservative reminder to take ambitious projections with just a pinch of caution, and maybe some skepticism ice cream on the side. So, the verdict in my stock-themed crystal ball? Hold on to Oracle if you've got it. They've got promising fundamentals wound tightly around innovation expansion strategies, but don't forget, these winds can change. Remember folks, always do your own digging and research. Today's predictions and analyst whisperings can toss up surprises, making it crucial for you to craft your own financial tale. Happy investing, and may the stock force be with you. Today's market activity was nothing short of electrifying, with Oracle stirring optimism and caution alike in the investment world, DocuSign rocketing to dizzying heights on stellar earnings, Microsoft's mixed options activity hinting at a dynamic dance between bulls and bears, and Block pulling a fintech magic act with bullish investor sentiment. Investors have had a packed day. It's like being on a virtual roller coaster with thrills at every turn. If you enjoyed the ride, don't forget to like, subscribe, and share the love with your fellow tech enthusiasts. Make sure to tune back in on Monday for our next deep dive into the tech realm. Have an awesome weekend, everyone.